Maybe I'll give it 30 seconds to let people come in, and then I'll start.
Yeah.
All right, we'll give it a few more seconds here, and boom, we'll get started. All right. Thank you, everyone, for joining us for this session, Embrace Your Competition. It's likely a good sign with Owen Kavanaugh. My name is Miles Taylor, and I am a Enterprise CSM here at Consensus, and I'm going to be the moderator for today's session. DemoFest is presented by Consensus. Consensus is leading the world into a new era of demo automation. Our platform gets your buyers what they need when they need it. It then multiplies your revenue team's impact with unique insight on those buyers. As a result, you'll see faster close times, larger deals, and higher close rates. You can learn more at goconsensus.com or view the automated micro demo at the link in the Docs tab on the right of your screen. All right. We encourage you to participate in today's session. Owen wants your questions. So on the right-hand side of your console, you can see a few ways to engage throughout the session. The chat function will allow you to engage with us as well as other attendees. And then throughout your session, you may see a few polls. Actually, I don't think we have any polls today, but we do encourage you to participate as your feedback is important to us. You can see that there. Our speaker will be taking questions at the end of the session, and you can see there. But we encourage you to ask questions at any time throughout the session in that little Q&A box there. All right. If at any time you're having technical difficulties, you can head over to the gear icon on the bottom of your screen. And here you'll see a help document, and then that will help you troubleshoot some common issues. Okay. Now I want to introduce our speaker. Owen is currently a lead sales engineer at Gong and the creator of Demo Persona, a tool that provides visual signposts during live demos. He has achieved President's Club twice and won numerous awards in 5 years of pre-sales. With that, I'm going to turn the rest of the time over to you, Owen, and I will stop sharing.
Thanks, Miles. Happy days. So thanks everybody for joining the session. I think it'll be a really nice way to start if you very quickly just let us know where you're joining from. I think it's always a nice thing to pop into the chat. Because we'll be using the chat as we're going through the session today as well. Getting some feedback from you guys, your perspectives as well. I want to get your input. So I'm seeing a lot of people, some people from Florida, Toledo, Nottingham. Yeah, so just some good few faces, and Craig, good to see you joining. So I recognise some of those names. But really appreciate you taking the time out of DemoFest. There's a lot of great sessions on today, and has been going yesterday as well. And today's session is going to solely focus on embracing your competition, and it's trying to dispel the myth that anytime competitors come up in a cycle is automatically a bad thing. I want to get that out of our heads. I want to elevate the discussion a little bit more to understand the reasons of competitors coming up in cycles, why the psychology behind it, and then the data points that prove that it could actually be a good sign in your deals. And we'll get through a lot of that today. Now, instead of me gatekeeping all this information, again, I made the point there's plenty of sessions that you could join at DemoFest, a lot of really good stuff. I want to focus on you, of what you're going to get out of the next, let's say, 30 minutes or so of listening to me chatting away. And I want to give away my secret sauce, the pieces that I'm going to cover today, the pieces that I want you to leave with. There's probably been a session throughout DemoFest talking about how you should get to the value point within 1 to 2 minutes when you start sharing your screen. Hopefully I'm within just the 2 minutes at this point. The first point that I want to get across to you, and I want you to leave the session knowing today, is that you're more likely to encounter competitors during your sales cycles today versus how they've been running over the previous years. And this is something that today is sometimes still a surprise for us in pre-sales or sales professionals as well, that we don't expect our competition to come up in a deal cycle. Sometimes we might have our blinders on, or we immediately go into the me versus you conversation, because we haven't been overly prepared on our competition coming up in the cycle. So I'm going to explain to you how those competitors are surfacing more often throughout your deals using a lot of data backed up by Gong. We also want to understand the why behind competitors coming up in a cycle. So this is something that I think is really important to understand the reasons for, like, fundamentally why competitors exist in a market in general. And then also, well, why is a buyer specifically bringing them up? What are their motivators for getting competitor involved in the sales cycle? And then lastly, again, I want to leave the session with some good news for you, is that even though they're coming up more and we understand why competitors are coming up, I want you to leave knowing that it can be a good thing if they're raised early. So we'll get to discuss that later on. Now, Miles did do a great intro for me joining the session today. My name is Owen. I currently lead sales engineer at Gong. If you don't know Gong, Gong's a revenue intelligence platform, ideally trying to understand how we can win more deals or perform better even as pre-sales professionals. And in my spare time, I also created something called Demo Persona that overlays visual signposts throughout your live demonstrations. But that's pretty much it. I've been in pre-sales for about 5 years or so, and I've got a keen interest in psychology. So we'll also bring in those elements and my learnings throughout the session today. So you're probably wondering, out of all the things that I could chat about, I could probably chat about a lot. Myself and Miles were chatting about barbecuing just before we kicked off the session. But why have I dedicated some research and time today on running a session on competition? And really what I found is that thinking about why I'd be passionate to run a session, because it's important that whoever's running a session needs to be passionate that they can convey that to you guys as well. I found two reasons that resonated with me. The first reason that I've identified and why I wanted to run a session on competition is that enablement to date on competitors is typically focused on you versus your competitor. It's typically going into that motion of, here's competitor A, here's what they do well, here's what we do well, here's things that we can't compete with, and here's your talk track when they come up as an example. And this typically leads into this kind of scenario that I would imagine that, and again, I'd experienced this in the earlier days of becoming an SE, is that sales professionals, or SEs in particular, love knowing the answer, and we love raising our hand when something is brought up. And this might be the case, even something that you're focusing on today when you're running your demos, that when somebody asks a question related to a feature, can we do X, Y, and Z? We're trying to train a muscle now to relax and just take your time and understand, well, why did somebody ask that particular question about that particular feature? What's their motivator behind that? What I found is that there isn't a connection with that muscle today, and how we handle like feature questions and demo questions, and how we handle competitors being raised in a cycle. Because typically when a competitor gets raised in a cycle, it typically turns into something like this, where it's that conversation of A versus B. Here's what we do. Oh, they said that, yeah, but we can do this kind of thing. And here's something that we do really well. And also the competitor is probably doing the exact same thing with your buyer. Meanwhile, the buyer, I'm not even going to say they're in the middle of the competitors going at each other. We're not even looking at them. They're over at the side. We're not trying to deeply understand, well, why has a buyer brought this particular competitor into the discussion? We're all immediately focused on competitor A. What do I know about competitor A? Instead of why did the buyer bring up competitor A? So that is one reason for why I wanted to run the session today. We need to think about enablement on competition in a different angle. It doesn't mean that A versus B discussion is going to go away, just food for thought, something different to think about. The second main reason for why, again, I'm running a session on competition is that, again, even from my own personal experience, a lot of times competition can be a surprise when they come up in a cycle. You probably thought that you had an amazing champion. They said, we're not looking at competitors. They said it throughout the entire duration. You're a vendor of choice. And then suddenly out of nowhere, competitor A, competitor B, or there's an RFP out of nowhere, or the worst case scenario. And really, the point is that it should not be a surprise. And I'm going to prove to you with data and different data points that proves over time again, your deals are fundamentally getting more competitive. So really, we need to shift our mindset to expect the competition to come up and make an appearance throughout our sales cycle. So how do we understand if deals are getting more competitive? So this is where, again, a lot of Gong data comes into play, where fundamentally over time there has been a reduction on the number of calls that are taking place with your buyers. So if we think about when we initially started collecting this data, on average throughout a deal cycle, you're having about 5.1 calls per deal. So that's everything from your qualification, your discovery, maybe one demo, multiple demos, and a closing or commercial type call. Now that's actually on average reducing to about 3.9 calls per deal. So fundamentally, we're speaking less with buyers, and I think we've all heard it. And again, there's probably a session in DemoFest talking about this. That buyers, I'm not going to say they complete the majority of their research independently, but they do complete an awful lot of it independently, and they're relying on sales professionals and SEs in particular to fill the gaps on pieces of knowledge that they can't obtain with public information. So the odds are, fundamentally, we're not speaking with them as much. We're getting less time with our buyers. Linked to that is also the feeling of revenue professionals saying that, you know what, over the last 12 months, I feel that my deals are more competitive. So this is a research study that we did, and it's just asking the question, are they more competitive or not? Based on no data, just based on gut feeling from those survey responses. And the data does back that up. So to be very specific, since 2022, on average, across multiple different industries, thousands of different sales cycles, thousands of different customers as well, your deals are actually 57% more competitive overall. So the data does back up that feeling. So really, the first thing that I want everybody to understand within the first 10 minutes or so of this presentation is that you need to expect your competition to come up in a cycle. So don't be like this gentleman here on my screen on the right hand side, where maybe he's 100 meters away from the finish line. He's done, I don't know if this is a half marathon or a marathon, and he's not expecting the nearest competitor to up their game in the last minute. It's something that is consistent across sport and also in B2B selling as well, that competitors are there to win as well, and they will be brought into your sales cycle. So takeaway number one, expect your competition to come up in your deals. Now, I want to elevate this discussion a little bit, right? So where I want you to take your mind is forget about the company that you work for, forget about the product that you sell, the industry that you operate in. I want you to maybe pop into the chat if you can. Why do competitors fundamentally exist in general? Why are there competitors in a market? I'd love to see why people think that is. And I'm going to look at the chat, and I've also got them themes prepared. Like a good bakery show, I've prepared something in advance, but I'd love to see what you think. Why do competitors exist in general? Capitalism, generally, there's a good reason for it. Opportunity, great product people want, and also as well as expecting somebody to say to make my life miserable by making my deal cycles tougher. To drive innovation, yeah, absolutely, Samir. Give the customer the best product possible and the best outcomes as well. Fill holes in the market and ability to get to the best solution. And blue oceans get red. Yeah, that was something that was in my mind as well. So we're on the same track, right? So we're elevating. It's getting out of the company that you operate with now, thinking about competition in general. So if we think about the fundamental reasons why competitors exist, and again, you popped in a lot of these already into the chat. The first one is around encouraging innovation, right? So Samir mentioned it specifically. We naturally have one eye on the competition. We have our competitive intel. I don't know if you have a Slack channel, you might have Crayon, you might have some clever ways of getting blueprints about your competitors. You might hear them speak at a conference that they announce that we've got new AI. So suddenly we need AI in every aspect of the platform. And ultimately what that's driving towards is a better product, but also a better outcome for the buyer, really, at the end of the day. And it's our competition that keeps us on our toes to encourage us to continue innovating in the space. And if we weren't innovating, we just be continues to flog the same product over and over again. It was also mentioned in the chat as well to serve a particular market segment. And you're absolutely right, because if you think about it, there are competitors out there who focus more on the enterprise sale versus like the SMB, your typical kind of like your Salesforce versus your HubSpot back in the early days. And that's why they fundamentally exist. And it'll be a pretty unique company to operate across all market segments. There'll always be localized competitors within region or within a particular segment. Particularly if you're in like a startup or scale up world, it also validates the market that you're operating in. And this is something that I realized quite early on in my career as well. When I kind of got a little bit disheartened, if you had a great idea, you do a bit of research, and then suddenly you see, oh, right, there's already a competitor doing that, or there's competitor B who's kind of similar, and you might get a little bit disheartened to think, oh, I thought I had a blue ocean strategy, as Mike Sully had mentioned. But this fundamentally, from like an investor point of view, proves that there is a valid market out there. There are enough companies operating in the space that have done their own research and identified that, yeah, actually, it is something worth going after. And the worst thing that you could do, I think, even if you were pitching to investors, is to say there are no competitors in the space, because there is always an alternative. One thing that isn't as exciting for a reason why competitors exist is fundamentally on the regulation point of view. So this could be a case if you're operating like in the utility space, think about like your gas, your electricity, your bin collection service. Competitors in this space just fundamentally need to exist to give consumer choice or to keep prices stable in the market. But where I actually want to dedicate the majority of the time is understanding the fundamental reasons from a buyer perspective of why they would go to a competitor. And it is linked to buyer psychology. The reasons naturally all within us, within a buyer, if I was a buyer, of why do I feel compelled to look at the market? Why do I feel compelled to not put my eggs all in one basket, as they would say? So we're going to do a little bit of a deep dive into it. So 3 fundamental reasons from a buyer psychology perspective of why they would go to market and looking at competitive options. The first one being around social proof, second on risk reduction and confirmation bias. So if you've ever read like anything like Robert Cialdini or How to Win Friends and Influence People, you might be able to think about where I'm drawing the connection already between fundamental concepts and the competitive space. But we'll deep dive into each of these. From a social proof perspective, people tend to seek validation from others, particularly when they're making a difficult decision or when it's an uncertain situation, exactly like purchasing a new product, especially if they've never had the service already. If there's no incumbent provider, you're coming in as a new service, a fresh product. There's a lot of change and there's a lot of risk with that as well. And Robert Cialdini, again, with the book called Influence and Psychology of Persuasion, outlines that social proof has a significant impact on how people come to a decision. So they want to seek validation from others, and it could be other salespeople as well at other companies, other competitors, on how they perceive the market, how they perceive the challenges that they have. Is it something that they've heard time and time again? That we're not unique. It's something that they could solve, but also competitor B can solve as well. So it does help them come to a conclusion of what solution that they should go for. The second piece is around risk reduction. So again, if you've taken any like economics classes in university or anything like that, you might recognize the graph on the right hand side. And this is all about prospect theory or loss aversion or risk reduction. And essentially the concept here is that if I was to give you, let's say €50, $50, you will have an uptick in happiness. You didn't have $50 before, now you have $50. You've got some happiness. You could buy some lunch tomorrow. However, if I was to do the reverse, and instead of giving you $50, take $50 from you, you would actually feel the pain of losing that $50 3 times heavier than the equivalent gain that you would have felt by gaining $50. And this also, again, brings into the buyer's world that they want to mitigate that loss or potential risk when buying a new piece of software. So it is a natural progression for a buyer to compare their options in the market. They don't want to put all their eggs in one basket. They want to say, okay, if I'm going to make an educated choice here, I want to reduce that risk. Again, I have a natural inclination to avoid risk and avoid loss. The odds on how I do that is go to the market. I want to see what else is out there and see if they're talking about the same thing. And then the last piece of this puzzle of why a buyer would bring up the competition in a cycle could be down to confirmation bias. So I mentioned earlier on that buyers typically conduct a lot of the buying journey independently. So they do the research. Maybe a lot of them are using something like ChatGPT today, or they go to Google, or they go to their network. They ask questions. What do you think about company A? What about company B? And this is where they probably want to validate any preconceived notions that they've built based on that research or experience. So they will go to a competitor and raise a point that maybe they think that this competitor isn't good at feature A or solving a particular problem, and they want to see what they have to say to ensure that they're on the right track. Or they may even bring it to you to say that, hey, I've looked at competitor A and I think that they can do A, B, and C for us. What do you think? And they want to gauge on how you're approaching that as well, if you're confirming a bias that they already have built up themselves. And again, if you want to read a little bit more about confirmation bias, I'd recommend mistakes were made, but not by me, listed down below. So the takeaway that I want to leave from this section is that in a similar way that we pause and we try to deeply understand when somebody has raised a question related to a product or to during a demo or during a discovery, I want us to do a similar exercise and pause and understand the logic or reasoning behind a buyer bringing that competitor into the discussion. Is there an underlying motive? Did they do some research and have built up some confirmation bias that they're trying to confirm with you, or are they trying to seek social proof and validate what you think on how to solve a particular problem? And this is really when we step further into the world of being authentic and being an authentic trusted advisor instead of just jumping straight in and answering, yeah, here's how we would do X, Y, and Z. So takeaway 2, pause, understand, why is my buyer now bringing this person or competition into the discussion? So I did also mention to you that it's not all bad news, because I want to answer the question for you. It's like, well, are competitors a good sign throughout this whole process? And the answer to that is yes, but it depends. And when I was thinking about it, I was like, that is gold standard SE question. I use that SE answer. I use that all the time. And again, in my eyes, I kind of like giving that answer. Again, it proves that there are alternatives, or it depends on how we go about it as well. But really, competitors come up is a good sign, but it depends on when they're being brought up. So again, to not gatekeep this information, when a competitor is brought up in the early stage of an opportunity. So when I talk about early stages, I'm talking about qualification, I'm talking about discovery, your initial demo. There is actually an uptick of around 32% on average on your win rates. And again, thinking about how you get to that data point, that's again coming from Gong's collective of data across multiple different industries, thousands of different sales cycles, thousands of different types of customers, and on average, 32% increase in your win rates. Now, that does differ depending on the type of competitor that comes up. You'll compete better against others, but on average, around a 32% increase in win rate. Now, what I want to get from you, though, is like some thoughts initially, right? Why would a competitor coming up in the early stage of a deal increase your win rate? Why specifically on the early stage is there a direct correlation to your win rate? So in a similar exercise, when we did it for competitors of why they exist, I want to get some input from you. Why in the early stages would they typically increase your win rates? Kat mentions they're not sold on the competitor, looking for other options. Yeah, absolutely. So I think then that they've gone through a full sales cycle with the competitor, and now they're coming to you. Means the prospect has done initial research. Absolutely, they have an idea what they want. It's a valid project as well, as what I'd say. They've done the research. They've dedicated time to researching it, and they've dedicated time to identifying you as probably or options in the market. Discussing why, address value of the needs. See how your buyer is thinking about you. Yeah, absolutely. We're all on the right page here. And again, if this isn't something that you've thought about before, hopefully this is opening it up for you. Engine evaluation with transparency and authenticity. Yeah, absolutely. So let's think about what I've thought of before coming in here. And again, a lot of what you're mentioning is already brought in. So again, like a baking show, I have prepared something in advance. So again, I want to have that in mind. 32% increase in your win rate is really impactful on your deals when they're mentioned early. So I think one person mentioned, Samir had mentioned that they've done their research. They have identified a clear and obvious problem that they want to solve. It's a clear indication that they have identified that as a real project that they want to dedicate resources to, because it does take resources to go to market, to take time out your day, to see what's out there, to look at reviews, to look at demos, maybe pre-recorded demos as well, but it's proving a genuine interest in the problem that they're trying to solve. It also does show engagement and commitment again. So similar to the point about being transparent, they are engaging with the salesperson throughout the cycle. They've probably gone through many buying cycles themselves. They probably want to get it out of the way. They're a serious buyer. They've identified a clear need, and they're committed to giving you the information that you need. So again, when we're thinking of differentiating or positioning ourselves, they want to give us the best chance to do that well. It also, again, shows, and it's kind of linked as well, an element of transparency. You've built a connection with the buyer. Again, you've built solid rapport. You've probably multi-threaded effectively throughout the organization. They recognize that. They want to be transparent as well and open with you throughout the entire process. And it gives you an opportunity to differentiate early and often throughout the cycle. So this is I think a key point as well, to understand that when you're differentiating early and differentiating well, so again, linked perhaps to what the buyer would value from a psychological perspective, it means that you're putting more value on those differentiating features. You're not just showing them at the very end of the sales cycle to try get somebody over the line, which they could probably view as you're just saying anything to get us to buy. You're differentiating early throughout the process. And I think somebody also mentioned as well that it's showing you clear insight into what they value or what their priorities are. And this is where you could probably get some intelligence on the type of competitor that they have raised into the buying cycle. Because again, we all know, again, we've product A or competitor A versus competitor B. We all know what our competitors are good at, and they're good at certain things. One might be more on the customer support side, one might be more on the professional services side. And if a buyer has brought a particular type of competitor into the equation, that'll give you an indication of how you should differentiate or how you should position the product. So taking that into account again leads to a better outcome. And then all of that combined leads to an accelerated sales cycle. So think about getting all of those elements addressed early in the cycle, not leaving it until the end, not leaving it where they've been hiding the fact that they're looking at competitors or they haven't given you the opportunity to differentiate correctly. It leads to that accelerated sales cycle overall. Now, it's not all good, because there are bad elements to when a competitor gets mentioned. So if they come up in the later stage of an opportunity, again, this is your negotiation, your contracting phase of a sales cycle, it actually has a negative 5% impact on your win rate. And again, based on thousands of different sales cycles across multiple different industries and companies. And in a similar exercise, why would it be a negative sign when it's in the later stage? You've got any idea? So we know why it's positive in the beginning, because of the openness, of transparency, opportunity for differentiation, showing engagement. But why would it be bad when it comes up on the later stage? So I'm just going to have a quick look. Yeah, is it Janae? Pricing? Yeah, get down on price. I'm just bringing a competitor involved. You'd see it a lot in renewals. To drive a renewal down, they probably want to stay with you, but they want to get a better price. So I'm bringing a competitor in. Checkbox exercise. Yeah, they probably have a procurement process that they need to tick the box as well. Not satisfied with what you've shown. Yeah, if you haven't differentiated early or been given the opportunity to differentiate early, they're still questioning the value that you've positioned. And they've been working them throughout the sales cycle. Yeah, so they've probably been quite reserved in letting you know that the competitor is involved. Again, the competitor has been maybe in their ear throughout the cycle already. So again, I've pulled out some of those already. So what this shows is an element of indecisiveness, lack of commitment, right? If we bring this back to buyer psychology, when faced with a difficult decision, people typically end in decision paralysis. So what happens today is people think about us versus the competitor, A versus B, but it should also be A versus B versus C, and C being do nothing. Because indecisiveness, lack of commitment is probably a huge factor in why they're going back to a competitor. They're not sure. They don't trust an element of what you've brought. They don't see the value. You probably haven't differentiated in the best way. So again, they're probably showing an element of indecisiveness. It also shows that there is a missed opportunity for differentiation as well. So if you think about the perception of differentiation in decision making, it limits your ability to shape their perception at the later stages. We bring it back to the fact that we are probably just saying something for the sake of it, to say whatever they need to get them over the line. There is an element of trust lost when we're bringing in those differentiators late in a sales cycle. It also might show that there is increased pressure. So Samir mentioned that the competitors are probably already involved in the cycle thread. They're probably in their ear. And that could be increased pressure from the competition, but it could also be increased pressure internally. So if, let's say, your buyer doesn't have the credibility to sell upwards or to make the case for your product in the organization, an exec has probably come in and said, well, have you not gone to the market? Have you not looked at alternatives out there? I'm not convinced on how you've positioned company A. And it could also be even an indicator from like an investor level, VC, private equity firm as well, who probably have an interest in a particular competitor as well. And they are pushing for the company to adopt that particular vendor over yours as well. So it could also be an external factor. And then it was also mentioned as well, and probably a huge thing, is the risk of price negotiation, that a competitor is, or you're getting involved at this stage. They probably even speak to the competitor already. You're now getting brought in just purely to help them drive down the overall contract value price. And this, again, could also be linked to value perception. So if we haven't differentiated properly, if we haven't proven the value properly, if there is no perception of value in the service that we're offering, this can, again, lead for someone to try, look at the options, see what's out there, see if they get a better price elsewhere if they again, don't see clear differentiators with your product. So the last takeaway that I leave you with, based on all that data, we know that competition can be good. It's not always a bad sign when they come up in your deals. It doesn't mean that it's always going to be good. So again, leave with the takeaway: early stage, positive; late stage, negative. It's not the end of the world when they come up in the late stage. There is a correlation with negative win rates, but it can be a good sign when they come up in your deal cycle. So what I want to do here is open the floor for a couple of questions, right? Things that we've gone through. If anybody has attended David Duffett's session yesterday, I had the pleasure of seeing David do a similar session twice. He always mentions never finish on Q&A. I'm going to do a Q&A before I summarize, because suddenly when people hear Q&A, it's like, oh, I'm going to pay attention a little bit more, and I've got some questions maybe that I want to ask. And then I'm going to do a quick summary afterwards. But at this point, if there's any questions, happy to take them if you want to pop them into the chat. And then we'll wrap up just by doing a very quick summary on the elements that we've talked about for the session. And if there are no questions, Miles, you can keep me honest.
Yeah, if anyone has a question, just pop that into the Q&A section now.
We'll give it a minute or so. And like when you're running a demo and you never ask any questions, it's what questions do you have? That's
there you
coming
go.
into my mind. And if there's no questions, that's absolutely perfectly fine. You'd probably attend a lot of sessions already throughout DemoFest. You're all out of your questions. Doesn't seem to be anything coming in, Miles. No, happy to keep going.
Yeah.
Cool. So,
sorry, we had one just come in from Janae. Do you have suggestions on how to reframe or better position yourself when they are mentioned later in the sales cycle?
Yeah, like I suppose it comes down to what you understand in the buyer, right? So do you know what they value? And I would personally call it out. I mean, we wouldn't be afraid here to call out statistics, and we've done it as well. When a competitor gets raised early, we call it out. It's like, yeah, generally that's a good thing. I'm glad you brought them up, and I would also call them out in the later stages personally. Is like, look, is there a reason why they're only being brought in now? To ask that question instead of continuing on as business as usual. Oh, they're raised. Okay, yeah, let's keep going. Let's try get the contract over the line. Take the time, understand why they brought them into the discussion, and then I suppose figure out what's important to them. It could be uncertainty. It could be they're trying to avoid that risk from like again a psychological perspective. They're trying to avoid that loss. So maybe that's where you bring in like a customer testimonial as an example, or a customer reference call, which tends to work quite well. But I would call it out. Maybe a bit bold, but I would call it out.
Okay. And we did have some more questions come in, so I'll read those off now. First one here from Craig. Should you bring up competition if they aren't brought up by the prospect?
Yes, but do it early. I would, yeah, I would encourage it. I would, again, you're getting a pulse check on the buyer. I'd probably raise it as like, who are you looking at? As a question, like what other options are you looking at? Again, assuming that they are, and kind of like you're getting a pulse check. You're going to see what their reaction is. If they're coming back and saying we're not looking at options, that's when you're thinking, right, this probably isn't a real opportunity. So absolutely encourage them to look at the competition, and again, know who you compete well against. So there'll be different types of competitors that you compete well against. You could probably plant the seed of A. Are you looking at competitor A? Are you looking at competitor B? Who are you looking at as well? So absolutely, I would encourage to do it early.
Okay, thank you. Question from Hannah. Should competitors also be positioned if we are approaching prospects ourselves?
Not too sure I understand. Should competitors also be positioned if we're approaching prospects ourselves? Maybe Hannah, would you? Yeah, go ahead.
I was going to say, if
Miles.
I were to interpret that, I'd say maybe getting in front of it and bringing up the competition yourself.
Yeah, so kind of similar then to Craig's point. If that's how we interpret it, Hannah, if not, let us know. But absolutely, I would bring it up. I wouldn't wait for a buyer to bring it up again. Just do it early. Don't leave it until the end to find out who they're looking at.
Okay, and then a question from Samir here is, how would you approach the question if the prospect asks who your competitors are?
Yeah, I think it's actually a really good point. It's tough to answer as well. I mean, I'd be quite honest, and it does depend on again, even in Gong. I'm trying to take myself out of the Gong world. Depends on what type of product we're positioning, or who I think the customer is likely to appreciate. So, like, are we talking to like an SMB customer? Are we talking to more of an enterprise? And that will, I suppose, lead me down the path on who I would raise in a discussion. But I don't think I'd be afraid in mentioning the competitors. It's always a tough question when they ask you directly, well, what are your differentiators versus that competitor? That's an awful question. I don't like getting that question at all. I always push back and like, well, what's important to you? So in a similar way, if I understand the prospect, I would kind of maybe list one or two competitors that they're likely to already be looking at. And I'd probably follow up with asking, have they already reached out to them or not? Again, linked to the point of encouraging it early. Don't do it. Don't do it late.
Awesome.
Cool.
Okay. All right.
Okay. Thank you for those questions. So before I leave you, just want to leave you knowing how you can use this and essentially recapping on what I've shown you at the very early stage of the demo. Hopefully now you understand leaving the session, knowing that your competition should not be a surprise. You're more likely than ever to encounter those competitors in your sales cycle. It should not catch you by surprise. You need to expect them, and you need to understand the reason behind a buyer bringing them into the sales cycle. It's not always just about features, functionality. It's understanding the intrinsic factors of why a buyer has felt the need to bring somebody into the conversation, and then leave with a positive. So you're more likely to win the deal if they're raised early. And as I said, bring them up. I would be bold. Bring them up. Raise them early yourself. figure out who they're more than likely to look at in the market and get a pulse check, get a sense check. Is this a real deal or not? Or are you wasting your time and need to qualify out? But that's the end of the session. Thank you for sticking around. I really, really appreciate it. If anybody wants to connect on LinkedIn, there's the QR code. I think people still use QR codes now. So jump onto LinkedIn, connect with me, send us a message if you felt that the session was useful. I'd love to hear from you. I'd love to connect with other people in the space as well. But really, thank you for your participation. Miles, back to you to wrap up.
Thank you. Let me share my screen here real quick. Thank you, everyone, for hopping on and engaging. It was a fantastic session. A couple of other housekeeping notes here. You may have already heard it, but it's exciting nonetheless. We're excited to be bringing DemoFest on the road again with DemoFest X. We had a great time. I was in San Francisco in February, and we're going to be bringing those events to London and New York City again this year. You can register to join us at either of those events at demofest.com or at the link in the Docs tab on the right of your screen. All right. We also encourage you to stop by our expo hall to visit premier partners of DemoFest. Remember, there's no transfer of money involved in this event. So all our partners have gone above and beyond to contribute, making this event a success for all of you. Again, thank you to Owen. Such valuable insights and knowledge shared here with us. Up on the screen are the upcoming sessions. You're going to be automatically pushed to the next section in your track. And you can switch tracks or sessions by toggling to the agenda tab on the top left of your screen. We'll see you soon. Enjoy.